About 2 minutes away from the end of the trading day, David Gura, Isabelle Lee here, and to help us take us through the closing bell, a global simulcast. We are joined now by Tim Stenovec, Norah, Mulinda, bringing together our Bloomberg Television, Radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. And Isabelle, we've been kind of talking about this over the course of the last hour. Some sleepiness to the general equities market today, but seeing a bit of movement there in the oil market. As we wait for some announcement here when it comes to what's happening or not happening in the Middle East. Tim, I know you've been watching that as well.
Yeah, and traders have been watching this closely too since I think February 28th, David. We're just still not getting any sort of signal, except the president did from the Oval Office say that the Strait of Hormuz is 100% open and controlled by the United States.
You want to fact check that?
Well, I do. I think the oil markets are fact-checking that for us. What do you think? I mean, we have Brent up to $87 a barrel, another 5% today. WTI futures up $80 to $82 a barrel. If that were the case, I would argue that we'd see that reflected in oil.
And, you know, Tim and I were just talking on the show just a bit ago about the impact at the pump when you think about consumers and you think about this environment that we're experiencing. We've been talking about the fact that we're still seeing, you know, a solid job market, but you're still seeing consumers still grappling with spending. And, of course, if you think about that, that 100% tends to be some of the gas that they're experiencing when they swipe their card at the gas station.
But, you know, even amidst all of this angst, all of this uncertainty in the environment, a lot of investors are still lavishing capital when it comes to risky assets. You look at Bitcoin ETFs, you look at high-yield bond funds. They're sucking in billions and billions of dollars every week, and equities have given no signs that their popularity is waning for one.
Hear those bells ringing in the background. I'm going to look here at the major indices closing here at the end of the day. The NASDAQ down 86 points, about 1/3%. S&P 500 down 0.06%. Again, a sleepiness, a lack of movement here, a lack of momentum here in these markets on this Monday, on this summer Monday, I should say. And finally, turning to the Dow here, down 0.1%, 61 points, closing at 53,975. Tim,
I think summer Monday is exactly the right way to describe this. Feels a little sleepy in terms of the equity trade today. Maybe Wednesday and Thursday we'll see a little momentum with CPI and PPI. In the S&P 500, though, we did see 231 stocks move higher, 268 went to the downside. Isabelle?
It's not only sleepy, it's also gloomy. I feel like it hasn't been summer, it's just always been dreary. But you look at the IMAP there, it's kind of a split between green and red. The biggest loser is the tech sector, down by nearly 0.4%. Financials is also in the red. Some gainers, consumer staples, energy, not a surprise, higher by 2%. Materials, communication services, and healthcare also solidly into green.
All right, let's get to some of those stocks that were in the green today. Speaking of gainers, I want to start with shares of SpaceX. I want to draw your attention not to the 4.2% increase in the share price, but to the actual share price, $138.74. That means it's trading it back above that IPO price of $135. It did get up to $139 earlier in the session today, but it's been trading below that IPO price since closing below that level almost a month ago. That was back on July 16th. The 23% gain over the last two sessions before today have helped the company trade above its IPO price. We also saw last week the more than 900 million shares released for trading. That was the first in a series of lockups as they expired. But shares of SpaceX up above that IPO price, closing today at almost $139 a share. Also, some M&A news in the eVTOL industry. Archer Aviation shares up 12% today. This after we learned that Boeing will sell several units to Archer, including Wisk, SkyGrid, and In Situ. These specialize in developing technologies for flying taxis and for drones. As part of the deal, though, Boeing is going to take a close to 20% stake in Archer and enter into a tech-sharing agreement to retain access to the Wisk core autonomous flight technology. I still haven't seen any of these flying through the skies, bringing us this way and that.
Not yet.
I don't know about you guys. I'm still.
We live close by. No, not in the airspace over my house either, Tim.
I'm still taking the bike and the subway to work as of now, but maybe that'll change.
It's okay.
And from the air to the sea, how's that? I want to look at MarineMax. Shares surging 46% today, the most intraday going back to November of 2008. It's going to be acquired by Safe Harbor Marinas. That's a Blackstone infrastructure portfolio company. $53 a share represents an enterprise value of about $1.5 billion. The deal was unanimously approved by MarineMax's board. The share price represents a 96% premium to that closing price going back to earlier this year, and the transaction is expected to close by the end of the year 2026, pending regulatory approval and shareholder approval. And because it's being bought by Blackstone, it'll be delisted from the New York Stock Exchange to become a privately held company. Once again, MarineMax shares up today by 46%.
Well, I want to turn to some of the names that we're watching that were in the red today. I am looking at shares of Apple ending today lower by about 1.6%. Now, this comes after Jefferies cut the stock to underperform. This is a stock, of course, that was trading about X dividend today. But this is another sign that Wall Street is getting more cautious on Apple. The big question here that Jefferies is essentially posing is the fact as to whether or not consumers will actually be able to afford the prices of iPhones. And as you can think about it right now, I thought that iPhones were already a little bit expensive, a little too expensive for that matter. But Jefferies just isn't really convinced the fact that Apple will be able to convince customers to pay even more for those cell phones. So you are seeing shares to the downside. From there, we head over to Trade Desk. We're seeing shares of that company down about 3% at the closing bell. The company essentially got a wave of downgrades on Wall Street, that coming from HSBC, DA Davidson, BNP Paribas, all of this coming after its results. We do know that Trade Desk issued a weak forecast, and so essentially you are seeing Wall Street analysts responding to that. But this is a stock that's been doing had a really tough year so far. I'm looking at shares of Trade Desk down about 65% so far for 2026. And last up, I'm looking at Intel, shares down about 4% at the closing bell. Now, it is lower after it said that it looks to raise about $15 billion in new stock. We were just talking earlier to Ian King. He said that this is a big deal. This news is a really big deal. And also potentially its first public share sale since 1971. And this move is coming as the company looks to capitalize on renewed interest tied to the AI data center boom. This is something that, of course, we've heard from so many different companies. So Intel certainly not alone there. But it has had a windfall that hasn't really taken off, like the likes of its competitors, Nvidia and AMD.
Yeah, something complementary that I want to mention here before I get to yields, and I do want to mention fixed income in just a second here, is we're getting more details on that Nvidia deal that was floated in the Financial Times, reported on the Financial Times this morning, that $500 billion deal involving Nvidia. Now understand that it'll be 6 partners on Wall Street will be working with Nvidia on that financing arrangement. Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR. They're going to establish a new partnership there with Nvidia, so very much part and parcel with what you were just talking about there a moment ago, this interest in capex when it comes to chip making. Certainly the story of Intel over the course of this morning. We're getting some earnings on this afternoon as well. Hims and Hers Health, which we talked about over the course of the last hour, seeing third quarter revenue $880 million. That is lower than what was estimated. $900 million was the estimate there. This is a story here, Tim, of a company that's really trying to find its footing here. So much has been pegged on the success of GLP-1s here, and it's really trying to find a path forward here. Yes, involving that, but involving other pharmaceuticals as well. Right.
Do they do a deal with a company that makes these? Do they no longer compound these because of challenges that the company has had from a regulatory perspective? Andrew Dudum, someone who we've spoken to in the past, the co-founder and CEO of the company, said that the company's never been, quote, in a better position to move faster or go further than we are today. He says in a statement, quote, as we rebuild the consumer health experience from the ground up with a doctor-led AI clinical engine, the depth and breadth of our relationship with customers worldwide has never been greater. Shares of Hims and Hers Health up about 3.4% in the after hours.
I mean, the bar was pretty high heading into this report. We were seeing a lot of folks on Wall Street just thinking about the fact as to whether or not we were going to see this company still losing money as they shift towards some of those lower margin branded GLP-1s. So the fact that we are seeing revenue topping estimates, you're clearly seeing that playing out in the after hours trade.
Breaks more earnings here as they cross the Bloomberg terminal. Looking at Rocket Lab as well, of course, this is a rival to SpaceX and getting those earnings crossing the terminal. Now, Rocket Lab seeing third quarter revenue of $250 million to $265. The estimate was $237 million. And this is the story of sort of how a company is doing. Again, yes, in complement with SpaceX, but also trying to expand into similar spaces as well. It acquired Iridium Communications a little bit earlier this year, and its stock has been trending quite high, Tim, here in recent weeks.
Yeah, just to go over some of these numbers as we're watching shares in the after hours, down about 3%. The company sees third quarter adjusted gross margin to 35 to 37%. Second quarter revenue coming in just above estimates at $234.1 million. Certainly a much smaller competitor to SpaceX, but one of those that, interestingly enough, you see increasingly talked about as being, okay, well, it can do a little bit of what SpaceX can do, at least on the rocket side, but ever so slightly, a little bit. The company does see third quarter revenue coming 250 to 265 million. The estimate was for $237.4 million.